Welcome to Supercool, the show about low-carbon innovations now scaling. Each week, we talk with the founders, CEOs, and executives whose companies are winning customers, growing revenue, and capturing market share by turning carbon-cutting ideas into competitive advantage. This is the rise of the low-carbon economy, a multi-trillion-dollar transformation already underway. I'm your host, Josh Dorfman. So many people want to live their values around sustainability. They want to be part of the solution. But if you're renting your home, you're kind of out of luck. The energy you use, it's pretty much at the whim of your landlord. About 40% of Americans who rent their homes live in apartment buildings, roughly 45 million people. Nearly none of their apartments today are powered by solar. But the thing is, the technology works, and solar is economical on warehouses, big box stores, and single-family homes. The costs have come down enough, and the efficiency is there. But apartments? The problem is actually something called the split incentive. On an individually metered property, where each apartment unit has its own electric meter and pays its own utility bill, the building owner pays for solar installation, but the tenant receives the savings. So building owners aren't inclined to do it. Owen Barrett tried multiple approaches to crack this problem. He started investing passively in apartment building syndications, but few were thinking about energy. So he started a consulting company to help them add solar. That failed because building owners don't really want to listen to consultants. So he raised capital and started buying apartment buildings himself. If he could prove solar increased returns on his own properties, maybe the industry would follow. And he made it work on mastered metered properties, buildings with one electric meter for the entire property. But that's just a fraction of the bigger market. Individually metered apartments, where each unit has its own meter, that's the real opportunity, and that is much harder. Because you can't just put one big solar array on, say, a 200-unit building and split the power. You have to install 200 separate small solar systems, one per unit, and that's harder, more expensive, and obviously more complicated. And even if you install 200 systems, how can you track which tenant gets electricity from which system? How do you bill them? How does that information get to the property manager and onto the tenant's monthly statement? Owen is a certified energy manager. His co-founder is a master electrician. They're solar installers, but they became software developers. The software tracks which tenant gets electricity from which solar panel, bills them for it, and suddenly the tenant pays less for electricity overall, and the owner earns revenue from all the solar. Now everybody wins, and now that software became Shine. But Shine isn't a software company. Shine installs solar on apartment buildings. They do everything: design, permitting, installation, billing, monitoring, and maintenance. They're one single vendor, one point of contact with a 25-year commitment. And the software, it's actually free. Where other companies tried to be software only, charging apartment owners $3 to $8 per unit per month for billing services, Owen realized that's actually backwards. The real revenue is in installation, $8,000 per apartment unit. So just make the software free, remove the barrier, capture the installation revenue. And then do something few solar contractors do: follow through. Monitor systems constantly. Catch problems before they become failures. Answer calls, show up for maintenance, do what you said you'd do. As Owen said to me, the solar contracting world is so bad that if all you do is what you say, you will elevate yourself to this level of golden standard. Shine was founded in 2023. In 2024, they installed solar on 100 apartment units. 2025, 3,000. 26, they're now projecting 20,000. And they're working with Avalon Bay and Equity Residential, two of the 5 largest multifamily owners in the country. One reason the growth is accelerating is because electricity prices are rising across the country. Owen's seeing 25%, 50%, even 80% annual increases in some regions. At those rates, solar doesn't need tax credits to pencil. The economics work without subsidies, which means we've entered a new moment for solar adoption in America. Here's my conversation with Owen. Owen, welcome to Supercool.
Thanks for having me on.
Well, it's very nice to do it from this side of the podcast equation, since I have been on your podcast. And now I'm just very happy to get your story, because Shine is such a fascinating business moving so quickly. So appreciate you coming on.
Yeah, happy to do it.
So where I want to start, I was thinking about what's the way to get into this story. And what's really top of mind for me is something that you said in an interview recently, talking about how Shine itself was started in 2023, but that came after about 6 years of buying your own apartment buildings and trying to decarbonize them and working through a lot of things around solar. And then that led to this bigger idea of like, oh, actually, maybe we have a product here that's going to solve a really big problem for this multifamily market with all the insights that you've had from that time in a very busy decade plus working in the clean energy field sector transition, call it what you want.
Yeah.
Take us back to that genesis, some of your story and what led to the moments, the insights that got you to Shine.
I had a small exit in 2018. I've been entrepreneurial my whole life. Most of my ideas didn't work. I had one that did. And I started investing passively into multifamily syndications. So these are a group of investors, limited partners, pool their money. They buy an apartment complex. The investment's usually managed by a general partnership that's one or a handful of guys and gals. And what I noticed really early on was the multifamily industry is just in the Stone Age when it comes to on-site renewable energy, energy efficiency, really anything to deal with energy. And so at the time, I thought I was retired. I thought, I made it. I'm just going to sit back, hang out, live on passive income. But if you're an entrepreneurial person or a curious person, sometimes you just stumble into problems that you can't ignore. And I was so curious why the multifamily industry was obsessed with creating new revenue through value add strategies like, changing the paint color or updating the floors or the countertop. But they were totally ignorant about the opportunities around energy. And to me, it's a lot easier to install solar to decrease utility costs than it is to renovate 100 units. And so I tried to start a consulting company called Value Add Solar that basically partnered with syndications and helped them do solar projects on their acquisitions. And that failed because I was a consultant trying to come in from the outside. Nobody really cared what I had to say. So then I started something called Z&E Capital, where we were buying the apartment buildings ourselves. So we were raising capital from LPs, from family offices, from private equity. And the whole premise was you can take kind of a traditional value add multifamily acquisition that has maybe a 15% IRR over a 5-year hold. And if you do solar the right way, you can increase that project level return from maybe a 15 to a 17. So you're doing traditional real estate plus on-site solar, you're increasing project level returns. I thought if we can do this on our own properties, we can sort of spur the industry to copycat and really decarbonize the sector. And it worked, but the challenge was that we were buying master metered properties. So these are properties that are built like hotels. You may have 200 apartment units, but you have one electric meter. And that's because that was the only way that we could figure out how to do solar. We couldn't figure out how to do solar on tenant meters for individually metered properties. And it took us probably 5 years to figure out exactly what was needed from an installation perspective and from a software perspective. Because when you try and install solar on a 200 unit individually metered property, you have to install 200 small solar systems. So one small solar system per apartment unit. And that is a harder installation, but post installation, there's a billing issue, there's a monitoring issue. So there's all these things that software is really well suited to solve. But we're a solar company pretending to be real estate guys. And now we're a solar company pretending to be software guys. So it's been an interesting journey for sure.
Wow. Okay. So you're looking at the multifamily apartment space. And like you said, I mean, it's the kind of problem and the kind of opportunity when people hear it, they're like, yeah, that would be great if it's solved. Because one of the things you've also talked about is the social aspect of putting solar on an apartment building. If you think about, and I'm paraphrasing back things that you've said, but if you think about where low and middle income people live, right? They're predominantly much more likely to live in apartment buildings than others in America.
Yeah.
And so if you want to get the clean energy transition, if you want to get renewables and create that opportunity for all socioeconomic classes across the US, well, then you got to figure this out, right? You got to figure out, okay, if I'm in my apartment, can I somehow get solar? And what you're describing is the back end of like, that's a really complicated thing. What I'm hearing you say is like the economics to the owner could make a ton of sense, right? You could add a couple of percentage points to your internal rate of return over a 5-year period or whatever that might be, but you got to figure out how to crack this really hard thing. And the other thing I've heard you guys say is like your apartment owners building for apartment owners. But, so then you're saying, well, also we're software guys and we got to figure out this problem and this problem and this problem.
Yeah.
So yeah, it was just a really interesting point of view of how you're trying to tackle this.
Yeah, I mean, the social piece is so interesting because the renewable energy industry is often attacked for, passing all the benefits to rich folks. I'm not smart enough to say for sure whether renewable energy is driving electricity costs up for low and middle income people. What I can say for sure, though, is electricity prices are skyrocketing nationwide. And if you want to stabilize electricity costs for low and middle class people, you have to figure out how to get solar on apartments. That is the only way to do it. And so we pitch, the financial message first, because you got to get owners on board. Then we pitch the environmental message because that's easy to understand. But there is this really strong social impact of all of our projects where you're taking the inflationary burden of skyrocketing electricity prices off of tenants in a way that otherwise it's impossible to go after.
Yeah, absolutely. So let's back up. Let's not get too far ahead of how we go about doing that and how you reach the market and how you roll this out and the sales process. Just help our audience understand, what is the core product of Shine? What are you bringing to an apartment building and an apartment owner, an owner of many apartment buildings? Because I know you're working with a couple of the largest apartment building owners in the country right now.
I mean, the core problem is something called the split incentive problem. And that's the apartment owner has to pay for solar, but if it's installed on tenant meters, then the benefit goes to tenants. So you have this mismatch of who has to pay for the system versus who benefits for the system. And so we thought, okay, how can you solve that? The way that you can solve that is you create a software platform that tracks exactly how much electricity is going to exactly which tenant, and then you bill them in arrears. So you may have studios, 1 bedrooms, 2 bedrooms. They each have different size systems, but every month they're getting a bill for how much solar or how much energy came from their exact solar system that's interconnected into their unit. And then you package it in a way that that information is sent to the property manager. Property manager uploads it into their PM software, and then it's sent to tenants on their monthly billing statement. So with that sort of foundational layer of software, you've solved the split incentive problem. And then you unlock this opportunity for owners of either a single building or a portfolio of buildings to invest in solar because now they can earn return on it.
And from the owner of the building, if those benefits are accruing to the tenants, what's the value proposition to the owner of the building?
So if you have your average tenant may spend $100 per month to the electric utility pre-solar. Post-solar, they're going to pay the utility $50 a month. So they're saving $50 a month from solar, but they're paying the owner $45 per month. So the tenant is saving $5 per month. The owner is now making $45 per month per unit. And that's how you can create a return on capital, an IRR, or whatever the financial metric is, to the owner on the upfront cost of the system itself. So the bulk of the benefits is going to the owner.
Okay. It sounds surprising to me when we talk about it that Shine is certainly at least the most robust player with the biggest offering in the space. Because, you start in 2023, we're now in 2026. This is kind of one of those things that, as you and I are talking about it, or if we were at a dinner party and someone was like, hey, Owen, what do you do? And you're like, I help multifamily apartment buildings get solar. And people are like, oh, that sounds cool. Like, how long have you been doing that? A couple of years. And yeah, we're the first company in the country to figure it out. People will be like, wait, why? That just sounds really, really obvious. Do you know what I mean? And as you said, you've developed the software to do it. But as I understand your philosophy, it's not like you're saying, gosh, the key to this is we need a more efficient panel or we need better tech, right? It's not about the technology. It sounds like it's really about some business model innovation, some software that unlocks a new opportunity, and then just going to execute on this business model innovation. But it's not tech. We don't need more tech to go do what you're doing.
And that's always how I've come at, I've been in the clean tech space, the sustainability space for, I think 12 years. And I've always been sort of surprised and frustrated with how much focus we put on new tech and how little focus we put on just deploying the stuff we have faster. We've got everything we need. We don't need all of these revolutionary innovations. Innovations are good. I'm not advocating that we should stop innovating. But we need to spend a lot of time focusing on just deploying what we have because we have a lot of the solutions that we need. And so when I thought about what's a business model that can scale and have a real impact on emissions, I didn't want to try and think of something new. I wanted to take something that we have, find a market segment that has not adopted it, and just figure out how do we rapidly deploy the tech across that market. And that's kind of how we landed on Shine.
Okay, because Shine, your ambitions, the numbers that I've seen, and I know 2025 was a huge year, surpassed some expectations. You were pushing $20 million in revenue, which I think was going back to early 2025. Some of your interviews, I think you were projecting like 7, and you're now so it really a monumental year. And so the numbers that I see is, from what I can tell, is you're in somewhere around 1,500 apartment units, maybe it's more, but somewhere in that ballpark, in a market where there's almost 45 million multifamily residences, right? So you have ambition, and you have huge ambition and scale. This is such an enormous market, right? Yeah. So how do you think about that opportunity and scale, and what's going to get us there?
It's funny because, we raised a seed round at the beginning of 25. And to raise that seed round, I was probably doing the fundraising roadshow for 6 months. And so I talked with a lot of climate tech VCs, and everybody wants to know total addressable market. And I would look at this market and say, this is enormous. Like, there are other players in the space, but they're software only. So they're trying to charge apartment owners, $3, $5, $8 per unit per month. The TAM on that is pretty small. It's pretty insignificant.
How can it be software only? Like, what does that mean?
So the same way that we've developed software, a billing software, to help owners monetize solar, there are software-only companies that just do the billing, but then the solution is kind of fragmented between, you have a software solution and a contractor solution, because somebody needs to install the solar. That's the most important thing. And so we saw this, and in our early days, we actually tried to pull some of these software companies into our value-add strategy. We said, if you guys could build the software that we need to acquire individually metered properties, we can go after this market. And they said, no, we're not interested. It's not on our roadmap. And that's ultimately what spurred us starting our own software. So it was kind of like, all right, you guys want to miss this opportunity, it's fine, but we're not going to give up on it. Going back to just the market, we're looking at the numbers, because when you're an installer, the bulk of the revenue of a solar project is in the installation. There's a little tiny marginal piece that's software. It's so insignificant. We just started to not charge for our software. So now our software is free. I was impressed and disappointed at the response from the VC community, because they just didn't get the opportunity if you could be a tech-enabled installer. But to your point, if on average we're installing 2.5 to 3 kW per apartment unit, and that costs, call it $2.50 a watt, so $8,000 per apartment unit-ish. And you have 45 million apartment units. It's a massive opportunity. We're not going to solve it alone. So we're in, we talk to people all the time, other installers, where we try and give them tips on what we're doing, because we could be a $500 million a year company. We're not going to put a dent in this thing. We need help from other contractors that are willing to do these style of installation, because it's a pain compared to regular C&I. It's harder, it's more complicated, but Shine is not going to solve this problem. We need other players doing this.
So Shine itself, does that mean in a certain sense you are more vertically integrated in the service that you offer, from install to management in a way?
So what we saw, buying apartment buildings, talking to other owners, talking to property managers, talking to asset managers, everybody is so stretched thin in the multifamily space that the idea of having a fragmented solution, we just knew it would never get adopted. You have to make this so easy for apartment owners. We will do everything from design to permitting to installation to billing to monitoring to maintenance. Everything will be in-house. You'll have one point of contact. And I think that's the reason that we're growing so quickly, is because people don't want multiple vendors for a single project. They just want one point of contact.
We had a company, you probably know them, called Parity on the show. They also work in the multifamily apartment space, high-rise space, and also hotels. Yep. And Brad, their CEO, effectively said the same thing. He was like, we will come in and we will optimize your HVAC for some huge apartment building, right? Could be 60 stories tall, provided that we have total control. right?
Yeah.
Like, and we will do everything, right? Because we know in this multifamily sector, these buildings, these apartment buildings, like they don't have giant teams to actually operate the buildings, right? And so it sounds like a very similar thing where as apartment owners being in this industry, you're like, I would imagine part of your lens is like, well, I know as an apartment owner, if someone came to me, Owen, and was like, hey, I'll do this, then you'd be like, yeah, you got to do the whole thing. So you have that insight because like, that's what I find fascinating. That's kind of why I asked you that in the beginning. It's like, well, we learned the pain because we had a different business model in mind, right? Like we were going to buy up apartments, figure out how to decarbonize them. And then we stumbled onto like this issue around getting off of fossil fuels for buildings. And we know buildings in their aggregate are responsible for 40% of global emissions. And that's embodied carbon. That's a whole bunch of stuff. It's not just like the energy they use. But with that said, like you were going through the pain of trying to decarbonize them, right? And so not only did you see like, here's the bottlenecks, but I would imagine you'd see like, and here as I own them, here's the kind of solutions I would need to adopt and how they would have to work, right? Is that a fair assessment?
Yeah. I mean, it was hard for us to decarbonize our own buildings as, you know, I'm a certified energy manager. My partner is a master electrician. There's nobody better suited to do on-site solar for apartment buildings than us. And it was a giant pain because everybody talks about multifamily real estate being passive. It's this passive investment. It's not passive at all. You know, you have tenants suing you. You have plumbing issues. You have occupancy. You have these other projects. Like you can't let the solar tail wag the real estate dog. When we first developed Shine, the software, we were doing it so that we could go acquire individually metered properties. And then there was this sort of gradual shift of perspective where it's like, this real estate is actually very hard. Like we're not asset managers. We don't really know what we're doing. So let's go back to being a solar company and take these years of experience of pretending to be real estate people and just package this solution in a way that can make it as attractive as possible for owners and asset managers. And yeah, it's got to be turnkey. It's got to be easy. There's got to be one point of contact. It's so important for the industry.
One of your fastest growing markets, as I understand it, is Texas. And there could be a million reasons why that's interesting, right? But I think one of the things I've heard you say, which I didn't realize, is someone could say, really Texas? Because I thought commercial building energy is pretty cheap. And you'd be like, yeah, it is. But residential building energy, on the other hand, or electricity, is pretty expensive. And so if you're going to come in and replace that kind of grid-tied, still fossil fuel grid, even though they have a lot of renewables in Texas on the grid, the economics actually make a lot of sense to go to a market like Texas and start talking to Texas apartment owners. I know you're nationwide too. But really where I'm going with that is, if you go into a market, now I'm going to make some assumptions here, but if you go into a market like Texas, then you are really going into a market where probably the economics have to scream really loudly that this is a really good idea. And so I'm curious to hear from you, where are you in your markets and what is that? I mean, you talk about you have to make it really easy for a building owner to say yes, but talk me through that sales process. Like, what is the pitch? What gets someone to say yes? I have some questions beyond that, but get in the door and get someone to go, oh yeah, like this makes total sense. We're going to do this with you guys, Owen.
We have two pretty distinct market segments. We have market rate and we have affordable with a capital A. So like low income housing tax credits. What I found to be really interesting is that our LIHTC division is growing way faster than market rate. And I think the reason why, and this might offend some listeners, market rate have huge ESG teams, which you would think, oh, ESG, like they're going to take the Shine solution and deploy it across their portfolio. What we find, though, is ESG teams a lot of the time are in this analysis paralysis, this like prioritizing reporting, not prioritizing actual projects. And so we have success with some market rate groups. We have a much easier time selling outside of ESG teams, like to asset management or the C-suite, because it really has to be a financial story first and an environmental story second. In Texas especially, we've talked to some private equity groups where the second you bring up climate change, emissions, whatever, like you've lost their attention.
They're just not. Sued.
Yeah, they're going to get sued, or they don't believe in it. They think energy prices are coming down, like whatever the reason is. So we lead with a financial story. If we're picking up that the room is sort of prepped for the environmental story, then we'll go down that path. It's been interesting because sometimes the people that I think should be our biggest champions actually hold up projects. And then when we get out of that department and we're starting to talk to groups that are really more numbers driven, they're in charge of the returns of the investment, and we can just pitch our value prop really clearly, like they get it, and projects will move a lot faster. So it's been interesting learning for me. And then on the LIHTC piece, and this is a new focus of ours, but the housing authority is basically determine max rent and they determine utility allowances. So the net rent that an owner can pay is the max rent minus the utility allowance. So HUD may say 2-bedroom apartment, the max rent is $800 a month, and we expect a family to spend $100 a month in utilities, so they can charge $700. Well, if we install solar into that unit, when we work with a utility allowance consultant, we show HUD that that $100 utility allowance is coming down to $50. Now that owner can charge $750, so they can increase rent in a rent-restricted environment, which is just, it's such a powerful lever for these developers and owners to have that it's been a really interesting learning for us because it's still multifamily. It's still a massive market, but it's sort of this unique market within the multifamily space.
Wow. Yeah, that is a fascinating insight. Can you give us a picture of like where in the States you're working with affordable housing in that way?
We're about to start a 76 property portfolio in Maryland, talking with one of the largest LIHTC owners in the country that, we're looking at 100 properties of theirs because there's this huge rush to safe harbor projects before the tax credit goes away July 4th. And unfortunately, like we've been pitching solar to multifamily owners for years. And now the message is, if you don't do it before July 4th, you just lost a 40% tax credit, basically. Sometimes it can be as high as 60. So we're getting tons of traction nationwide. I'd say it works best in states where, for the LIHTC opportunity, where the majority of properties are up against max rent, because you only have that max rent utility allowance sort of mechanism if properties are at max rent. And then you have higher benefits to the owner where cost of electricity is high. So it doesn't work well in Kansas, for example. Electricity is just too cheap. It doesn't work well in the Pacific Northwest because the solar irradiance is too low. But like the Smile states are great opportunities for us. That's where real estate is sort of investing the most too. So it just overlaps well, kind of real estate markets and solar markets.
Okay, so you're talking across the Southeast through the Southwest, generally
Yep.
speaking.
Yeah, exactly.
Okay. On the market rate side, you talk about some of the, let's say, the biggest apartment owners in the country, or just big apartment owners in general. Maybe they're not the biggest in the country, but big enough to have staffed up sustainability, let's call it ESG teams. Or when you approach those kinds of companies, is the risk for Shine that you get kind of pigeonholed or siphoned over there? Like they're like, oh, I get what you are. Go talk to them. Right? And you're like, no, wait, I don't actually want to talk to them because I know how this is going to go and we're going to get stuck in, analysis paralysis. I really want to talk to the ops guys or the finance guys. Is that some of the hurdle just because they're like, oh, okay, Shine, I'm not really going to pay too much attention. I'm just going to read an email. I see solar. I see these things. ESG,
you over here.
Right?
Yeah. Yeah, it is. But, we're working with 2 of the 5 largest multifamily market rate owners in the U.S. And what we've learned is this is sort of it's a blessing and a curse. The solar contracting world is so bad that if all you do is what you say, you will elevate yourself to this level of golden standard when it comes to being a contractor. So that's how we've set ourselves apart. We tell people what we're going to do, and we do what we say, and we're responsive to phone calls and emails. And it's pretty astounding how far that goes in the solar contracting world.
I'm just laughing because last night I was scrolling X before going to bed, which I probably should have just gone to bed, but I did see this this Mike Tomlin video, the coach of the Steelers. Yeah. And it was awesome. I think it's the preview for some TV show that's coming out. But he had on the board, he's talking to his whole team, and the words are reasonable expectations. And he's like, okay. He's like, this is a very competitive industry. You men are in this room. This is very competitive. He's like, I don't care what's happening outside this room. I don't even care what the guy sitting next to you is doing, right? This is about your battle with yourself. And you're in this room. You need to always be getting better. That is a reasonable expectation, right? He just goes, he's like, last year you were a rookie, you made a lot of mental mistakes. Okay, we let it go. This is year 2. We expect you to make less mistakes. That's a reasonable expectation, right? He had this like really interesting way of just conveying this is what we want. And it sounds like in the same way, it's like we're going to do what almost any other industry would expect is like we're going to do what we say. Because that is just basically a reasonable expectation of but it stands out, like you're saying, in an industry where probably for a whole bunch of reasons, the reputation is bad, the follow-through is bad, you've had some bad actors or people have given it a bad name, at least in certain parts, like residential solar, we know, right? The solar bros, et cetera. So anyway, I could go on, but did you want to respond to that?
It's remembering that the customers are the most important part, right? And when we hear that they've had bad experiences, it's, well, what was your bad experience? And there's things that we can fix and there's things that we can't fix. Like one customer that we're working with, they've had to change their internal underwriting because so many of their systems are underperforming. They'll see what contractors are telling them it's going to produce, and then they'll underwrite like 80% of that. And so our natural question is, well, why are they underperforming? That shouldn't be the case. And the answer is, well, it's because we have all these fragmented monitoring portals that nobody's using. And so when a piece of equipment is down, it's down for 6 to 12 months. And then it takes 3 to 6 months to do the warranty claim. And so you have, a string inverter and 200 panels not performing for 18 months. Yeah, that's going to cause a huge drop in production. So for them, we're building out a custom monitoring portal. We ask, what do you want to see? Like, software is not hard for simple things. So we're pulling all the data anyway. Let's just figure out how to package it and present it in a way that's useful to them so that we're monitoring it, they're monitoring it. Now there's 2 sets of eyes looking for errors, but that's just not how your standard contractor thinks. They just want to get a job, sell a job, move on to the next job. We want to be with these projects forever. Like for the 25 years that they're producing, we want to be with them, monitoring, handling any warranty claims. And we've seen that sort of attitude and that approach elevate us from just another contractor to, okay, Shine may be more of like a strategic solar partner, not just a contractor installing at this particular site.
Yeah, that's really cool. Can you tell us who you're working with, or are those under NDAs?
No, we're working with Avalon Bay and Equity Residential on the market rate side. We're working with Enterprise and Hudson Valley on the LIHTC side, and a couple other big ones should be announced soon. We're working with smaller groups too. It's not just like the huge institutional groups. We work with smaller like syndicators. Oftentimes they're actually easier to work with just because they move faster. So we're really excited, getting traction everywhere.
Awesome. What happens after June, July when these tax credits sunset? Are these tax credits being sunset as a result of the one big beautiful bill? Is this?
So there's kind of a dual track schedule. If you quote unquote start a project before July 4th, you have 4 years to get it to be operational and the tax credits are preserved. So that's our big focus, because if you start it after July 4th, it has to be operational by the end of 2027, which is a harder target to hit. Our plan internally, we think we're going to get somewhere between like $25 and $100 million of projects under contract before July 4th. I know that's a big range, but it is what it is. And so then we'll have, call it a 2-year pipeline of projects to build. And then I think one of 2 things will happen, or both could happen too. We're seeing electricity prices increase, 10, 20, 30%, sometimes 50% per year in utilities. So if you compound, call it 25% annual electricity growth over 2 years, you don't need a tax credit. Like the economics are the same as they are with the tax credit. So I think to me, that's unfortunate for ratepayers, but it's exciting as a solar company. Like the opportunities are going to remain. The other thing that the industry is talking about, but I don't get as excited about, is if we have change at the federal level, the tax credits will probably come back or could come back. But I don't think we're going to need it because electricity rates are going to be so high.
Yeah, obviously, yes, that is the frustration. And, Aaron, our producer, my co-founder who you talked to before we came on, he lives in New York and is experiencing a lot of that frustration now. So
we've talked to customers where the rates have gone up 80% year over year, and then another customer 50. These are not outliers, I don't think. I think this is just what we're going to see for the next few years.
Which is really fascinating because, again, like you said, if the value prop just competes on its own, regardless of what's happening in Washington, obviously that's all the more powerful for the industry and for these solutions to expand. As I'm hearing you talk about Shine, we've talked about the fact that you're not introducing new clean technology. That's really not what this is about. This is about finding a solution that fits what apartment owners and asset managers need. It kind of fits the install, fits the ease of installation, delivers the financial returns they're looking for, really makes it like as easy for them to say yes as possible. What this reminds me of is a certain kind of innovation that we see on Supercool that is pushing the low carbon economy forward and really is more about this business model innovation. Like a company like Butterfly, which you may know, Buddrefly, which is,
I don't know that one.
So Butterfly is really interesting. Their business model, as I'm saying it, there's parallels in how they think about their business. Their business model is to go into, say, a Taco Bell or a KFC or a Popeyes and say, look, we're going to make you an offer you can't refuse, very kind of Michael Corleone or Vito Corleone style, right? We're going to come in and we're going to upgrade your refrigeration, your lighting, your entire kitchen, all of your equipment, because we're going to make it much more energy efficient. You pay zero money down. We'll split the savings. And then we'll also provide the software. We'll take over all the payment of energy bills. We'll use some AI. We'll optimize the whole system. We'll create enough savings in that where Butterfly can become very profitable. And the restaurant gets this incredible upgrade and shares in some percentage of the savings too. Like, how could you say, no, you can't.
Oh, yeah,
right?
It does. Seems too good to be true.
And they're now in, as of 2025, they're in 8,000 plus franchises. And it's also like they want to be there forever because it's a very similar thing. Hey, if we get one Sonic and the message goes back to Sonic headquarters, this is good, we're saving money and the experience is better, then headquarters is going to call Butterfly and be like, roll this out, right? So just like we talked about, let's land with Avalon Bay or whomever, let's do 1, let's do 2, let's do 3, let's have a great experience. And then, man, the upside could be really extraordinary. That's one thing. Yeah. But the other thing is, it's really also about the business model innovation to make it drop dead simple for a customer who, regardless of how they feel about climate or sustainability or whatever, is just like, of course I'm going to do this. Yes, based on my economics and the financing of it. And the experience that I want to be able to offer to my customer. The other piece, though, and the reason why I think about Butterfly and hear you talking about it, is because it's really about the execution. It's about staying there. And that's what makes it, over time, so delightful for that asset manager or the apartment owner, because they're like, oh, this is great because I no longer have these problems and I can call Owen or his team and they are executing and really running this part of my business for me as a partner.
Yeah. So important. These are expensive systems. So it's not like we don't think about them lightly, but they're expensive systems and the useful life's 25 years. So if someone is not looking after them, something will go wrong, and then it's just going to be another bad story about solar that we're contributing to the industry. So we just want to do everything that we can to make sure people have positive experiences so that word of mouth and that messaging travels along rather than just the bad experiences with solar.
Of course, I love this. This is exactly what we think is super cool when the profit motive is the driver for change. Like the uptake can come pretty quickly. That's right. It's really framed in a very kind of our capitalist system, American-centric kind of way. One of the things that I wanted to ask you too, in terms of your marketing, you've talked about doing like an educational campaign. You have to let apartment owners know that this is possible. So what kind of marketing do you do? How do you reach the market?
Mostly podcasts and conferences. The multifamily space.
You're welcome.
Yeah, thank you. I'll send you a check. The multifamily space is interesting because I think whether you're like a smaller syndicator or you're on the institutional side, you get a lot of information from podcasts. So we found that to be really interesting. We've had some inbound messages from really small podcasts, from large ones too. Because I think if you listen to a conversation for an hour, it's much easier to understand what Shine is trying to do than, through like a cold email or a LinkedIn ad or something like that. So we like long form education. And then conferences is the other thing. And conferences are also hit or miss. Some go really well, some don't go well. But just getting out there and connecting with the industry, not selling, educating, because there's nobody else doing this. So if we can just explain the value and explain how we think about things, it may not be the right time for a particular owner, but when they think about solar or when they get pressed by their executives to squeeze some extra returns out of an investment, we hope that they think about shine. So we're really in this for the long game. We're at the very beginning of our story, I think.
Can you grow as fast as the market might demand?
That is an interesting question. I think yes. In 2024, we had 100 units. 2025 was about 3,000, and growth was okay. 2026, I would say, is probably going to be 20,000 units. The interesting thing is being a software first solar contractor solves a lot of headaches that would arise for other contractors. But the other thing is most of our growth is on the project management side of things. It's not like to the point that you keep making, not really doing anything novel. Like we're taking a tried and true technology and we're applying it in a novel way. But the personnel that we need to grow with us at the pace that we're growing, it's not like we're hiring cutting edge engineers. We're hiring like talented project managers and people that understand utilities. So I think we'll be able to support our growth no matter how quickly we grow.
But if you go from 100 units up to 20,000 units over 2 years, and that means many more buildings, many more geographies. Yes, it's software. Software obviously travels everywhere pretty easily. But still, the impact of that, right? Like, hey, we're on the hook for maintenance. We're on the hook for calls. We're on the hook for showing up. So that does become another level. Yeah, like great project managers, right?
It's a good point, and you're making me think about other things that just I kind of overlook, but it's so important. Like, we don't generally go into RFP scenarios because RFP always is a race to the bottom in terms of price, which unfortunately is a race to the bottom in terms of quality. We have 2 inverters that we will install, Enphase and Solar Edge. That's it. And we don't even really like installing Solar Edge. We'll just do it if a customer requests it. We install certain modules. So we're being super selective in the components that we install because we know we're on the hook for maintenance for 25 years. And after installing solar for 15 years, we have a very good idea of what works and what doesn't work. And then most maintenance issues are really monitoring issues. So thinking about how you're building out the monitoring platform in a way that really facilitates maintenance. Again, you can use software to sort of, I don't want to say eliminate, but decrease some of the headaches that cause so many contractors, solar contractors, issues down the road. So I think it's being smart about what you're installing. It's being smart about the systems that you're building. Like when I told my COO that I wanted to hire a CTO when we had one system online to build out a monitoring platform, he's like, what are you talking about? That's a waste of money. But it's not, because I saw the pipeline about what we're about to build. And so we wanted everything online, running, tested before we went to 3,000 units. And now we're doing certain things before we go to 20. Thinking about the long term and just being really focused on what you're trying to do. We don't install solar on anything other than multifamily. That's all we do. People ask us to do other types of real estate all the time, and usually we say no. We just do multifamily.
With the software, and since you have all of that data, I guess it's going to lead to a couple of questions. But what kind of interface or data do you provide to your clients? Like, what can they see? Is there a real-time lens that they can see? Do they want to see it?
That's the important question. We spent a lot of time on the user interface, the front end, and then we monitored who was logging into it, and nobody was. So we give people access, but at the end of the day, nobody's going to log in if everything's going right. They're only going to log in when things are going wrong. So we are monitoring it constantly. We're addressing things, as they come up. We're notifying on-site teams that we're going to be on site. We're going to be doing maintenance. But if we do our job, then I don't think anyone's going to log into their systems because there's no reason to. That's been interesting. To the data piece, this is where it gets super exciting. As electricity prices skyrocket and as the grid gets constrained, my hypothesis, and Jigar Shah, this is sort of going to echo some things that he says, but the only way for utilities to keep up is to incentivize storage. There's no other way. You can't build peaker plants fast enough. It's not going to happen. It's too expensive. It's too dirty. So the problem with apartment buildings is that generally owners only have insight into the common area meters and how electricity is being used on those. But 95% of the electricity is being used at the tenant level. But they can't get tenant data because it's owned by the tenants. When we interconnect solar into the tenant units, we get 15-minute interval data at the tenant level. So as utilities start rolling out incentive programs for storage, we will have all the data that we need to say this building is a good candidate for storage. or this one is, and then bring that to the owner and say, we did solar for you 4 years ago. It's working great. Now there's another incentive program with storage. You should think about doing that. And so 3 to 5 years from now, I think we'll be installing tons of storage systems alongside the solar that we've already installed. So the data is really exciting.
Oh, I love that. And so the unlock then is having, there's two unlocks. There's having the data and then having the incentives from the utilities where you're in the buildings, where those things align to then batteries in those buildings. Does that then lead to your thinking about, you brought up Jigar Shah, we had him on the show a few weeks ago. And for our listeners, Jigar's been in many places. He was at the DOE running the loan program in the Biden administration and is a big thinker on this stuff. But does that mean that you're also thinking about the next level of that demand response, virtual power plant, you're in the building, you can, and the financial opportunity that creates, and then as you're in 20,000 units, and then 40,000 units, and getting to your, 200,000 units by 2030, which it sounds like you actually, there's a chance you might blow way past that, who knows, right? Then that would be a lot of buildings. That would be a lot of energy to be able to manage, to be able to partner with the grid, to be able to help the grid flex.
Multifamily units are just sort of overlooked generally because it's challenging. The tenant owns the meter, the tenant owns the data, the tenant just owns their unit and their electricity. And so there has to be something that enables that unlock, and we think it's solar.
Yeah, incredibly exciting. And just so exciting that you figured it out. Because, this middle market, the C&I, which is, what is that, commercial and industrial, is that what C&I stands for?
Yep.
But this market for solar, which, I mean, I've never been in that industry, but I've talked to enough people who always have told me for probably 2 decades now, it is so hard to reach, to market to and acquire customers efficiently without enormous spend. But you have picked your lane, you're really focused, and you've found a way to clearly solve that for your offering in something that's been notoriously challenging. But again, I think that comes back to why we look at this market and say, okay, 40 million, 45 million plus apartments, we got a long way to go because solar's not on those buildings yet.
Well, not yet. It will be, though, soon.
Owen, this has been a great conversation for me. I think hopefully for our listeners will have really enjoyed as well. So insightful. Really love what you're doing. Thank you so much for joining us on Supercool today.
Yeah, thanks for having me on.
And thank you for listening. If you're enjoying Supercool and appreciate our conversations that merge climate, innovation, and commerce, please take a moment to subscribe and leave us a review. It's the best way you can help the show reach other future-forward decision makers who would benefit from these conversations too. See you next time.